Hello, today is July 25th, 2020. Let's go over our calls. The last call we made said that gapping down, promptly undercutting these lows would increase the chances that the high was in, and that's what happened. Here's what we said. Early weakness, prompt undercutting of the lows, ideally by gapping under it. That's trouble. That's what happened, and it wasn't reversed. That doesn't tell us anything about Monday, but it's not a good sign. Now we called for the pattern with the early high, and this is it. Usually it's a negative day which closes near the low, and when you don't close near the low, it's a sign of strength. We had the early high, late low. But that's invalidated if we promptly take out the low of the day. There's significant support at this low. Part of it's from the June FOMC announcement price, and we'll see some more support later on. So the question for Monday is whether or not that support holds or not. During the day, MEJT gave an ultimate buy signal right at the low. The system says it's a false move, gives us a target of 3,200.69, most likely to print before Monday's close. And unless we gap up smartly, that's my call. If it does print, it's probably trouble. The real question is whether this high is going to hold. Now that high isn't the only number that works. I have another target just close to 3,300. You can see it's a target of the prior consolidation here and here. So if we get there, it's a very pretty number, very pretty target, and a very likely place for the rally to end. But just because it works, it doesn't mean it's the only number that works. And the recent high will work too. A lot of the times you're going to get this impulsive rally followed by a corrective wave, which is a Fibonacci retracement of the, I should say impulsive decline, followed by a rally which retraces a Fibonacci percentage, and clearly that didn't happen, but sometimes it isn't a Fibonacci percentage of the whole decline. Sometimes it's Fibonacci percentages of each wave. And if you take wave 3, you'll see how this wave A stops right at the 78.6%. And if you take wave 1, you'll see the recent high also stops right at 78.6%. So it's one of the perfectly logical places for this to end. It's also close enough to our original target based on standard Elliott wave counts and Fibonacci stuff. But until you undercut some of these lows, it's not a guarantee, but if we do drop from here, at least it makes sense. Now, in addition to support from the FOMC price, you have support from a couple of other trend lines. You can draw this trend line, comes right there. You draw the channel from these highs to this low and this low, it comes right there. So we're really right at a support level. And if support holds, fine. But if we gap down Monday under that support, it's a major break of support. And I think all you'd have to do would be to hold it and add to it to make it almost impossible for us to recover. If we do gap down, that hasn't happened yet, and it might not happen because we're at support. But if we do gap down, it's really a sign of trouble, because gaps like this don't hold. When you have an impulsive wave down and you gap up from it, at some point that gap fills, and that's way down here. Doesn't mean it has to fill anytime soon. Well, Monday's pattern has a really high doesn't mean you won't gap down. They're mixed indicators. We have a lower MEJT target. Unless you gap up smartly, I think it'll print. Doesn't mean it's impossible to gap up, because we had significant support at Friday's low. That may hold on Monday. In addition, Friday's usually negative pattern couldn't close under intraday's low despite gapping down. It's positive unless reversed early Monday. On a longer time frame, Thursday we hit a new recovery high and then reversed under recent lows. It's a negative sign. Friday's additional gap under the low confirmed it. Bulls can still invalidate the pattern, but the longer they go without invalidating it, the less likely they'll be able to invalidate it at all. So if you're a bull, you want us to recover last week's high quickly. If instead we gap down sharply under Friday's low, it's a break of support. All the bears would need to do would be to hold on to the gap, add to it Tuesday. Were that to happen, I think it's going to be pretty tough for me to see how we recover. So the most likely thing on Monday is we have a gap and a prompt move outside the day's range. This is quite negative action. Reversing from the top like this, there's still a chance it gets reversed by gapping up and promptly overtaking this high. But if we gap under this instead and we hold it just for a day or two, the odds have dramatically increased that this tops in. And if that happens, and I'm not predicting one way or the other if it will, if that happens, the stage is set for a pretty steep decline. We have the pattern with the early high Monday, and that's today's call.